In this video, I will talk about why I think Nokia is a good stock. I'll mostly talk about why it struggled so far and why I think it's going to go better now. So, very important to know is that Nokia has a really strong market share in the 5G space. Their market share has been growing a lot, especially in India, but the US market has seen a decline and the European market has been even. But that's not due to their market share, that's mainly due to lack of investments. Because at the start of 5G, people were really hyped, so they got a lot of 5G infrastructure. But then their inventory was basically full, so they slowed down a lot in 2023. And Nokia seems to think that that will normalize back in 2024. So you may think, if Nokia has good market share, why is their business struggling so much? Right now, they're really struggling with monetizing 5G because the basic service support systems they are not built for 5G. Like in 4G, you just have like a modem, you connect everyone together, have network, and get paid every month. All good. But with 5G, it's more specific because you're gonna need a lot of bandwidth for certain stuff, but very little bandwidth for other stuff, making it like less reliable to just have a monthly payment. Another problem is that the magnitude of the amount of transactions in 5G is a lot higher than it is in 4G. And a lot of systems can't handle that, which causes like data breaches and security issues, but it also just makes the network perform not to the standard that it could if it's maximized. To make this work, it's like important to have a lot of business partners, which Nokia has, because Nokia has a lot of market share and they also have a lot of partnerships over the last 2 years built up. So they have 270 different service providers that they uh, that run on the Nokia infrastructure. So that is about 1.8 billion people they provide internet to. But right now it's not well monetized. So if that becomes well monetized, I think they will have like a big surprise in revenue and it will send the stock up a lot. So to combat this, Nokia has been investing a lot in making their product more for enterprises. So they're switching to a B2B to X system, which just means business to literally anything. The reason why it does this is because like before you did business to consumer, right? You just pop some 5G towers down and you're like, hey, you want 5G? You can get 5G. Just pay more a month. But that has been really inefficient. So instead, they will just go to companies that have like a specific need for high bandwidth or a private network, and then they will offer them a 5G system. So this quarter, the US sales were down from 2,216 to 1,293 on a year-to-year basis. So that is really bad, but that is mostly due to inventory conjuncture, because it's they basically overbought in 2021 and now they just don't need it. But they will probably have to reinvest again, because if they want to compete on the 5G market, they still need the newer technology. In India, you saw big growth that went from 241 to 1043, so like 4 times growth. But that is expected to normalize to less growth. Then in Europe, you go from 1378 to 1523. But the thing with the Europe revenue segment is that it looks more than it is because the entirety of the Nokia technology segment is reported for the Europe region. So that that growth in Europe is not reflected by the 5G growth. It's just Nokia technologies. In the Middle East and Africa, it's basically just flat. In Latin America, it's basically flat. And in Greater China, it's going down because right now China is preferring the infrastructure from Chinese companies. So one of the segments on the Nokia earnings report is the Nokia Technologies. Basically, Nokia Technologies is a pretty small part of the revenue, but it's like complementary to the rest of the Nokia business because it's like all about making 5G better or making 5G chips, like that kind of stuff. They signed a patent licensing deal with Apple and Samsung, so it's the the revenue from the technology segment should like grow a bit. Um, they're also litigating against Oppo right now, which they mostly have been winning in that. So maybe that will add some extra revenue as well. So basically, I think Nokia stock is a good pick because it's trading at 5 PE right now, meaning that the market thinks their revenue will either stay flat or decrease slightly. But I think their revenue has like a lot of growth capability because I really believe in their network as a service to big enterprises. And also, I think the 5G spending in North America will normalize again, which drives higher margins than the 5G in India, because India's emerging market, so their margins are less good. Um, it's also just a really good value play right now. You get like a 2.5% dividend. It's the stock price is really hammered down, even though their enterprises have been growing. It's mostly just the cyclicality of the 5G investments that have been really hard on Nokia in the past 2 years. So I I think it's a great stock to hold. It's my second largest holding. So um, it's also my first YouTube video, so I'm quite nervous and shy. You may have noticed. So hope you enjoyed the video on Nokia stock, and bye. As for shareholder returns, Nokia in the past quarter bought back 21 million shares, which is quite a bit for one quarter. In some quarters, they really didn't buy back that much shares, but they seem to be rapidly improving the amount of shares they're repurchasing right now. They also have an annual dividend. Right now, the yield is 2.68%, but the dividend has gone up and down a bit lately. Like it's not a very consistent dividend, but it's quite nice right now. So if you're dividend invested, it's maybe like an opportunity for a dividend grown company. Nokia has a PE of 4.975, which is really low for Nokia because its historical PE value from 2010 to 2023 has been 10.5. Ericsson's PE right now is 10.5, and they're basically in the same market with similar struggles. Ericsson's price to book is 1.40. Nokia's price to book is 1.10. Nokia has 7.48 billion in cash, and they have 3.39 billion in debt. But the debt is pretty low interest rate because a lot of the debt they got is from ESG subsidiaries. So that's pretty good. Also, the interest rates were really low when they got most of their debt, so that also helps.